Why NIO offering 75 million new shares is actually a good thing. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove it. And today we have to speak a little bit about NIO. The main thing we're going to speak about today, okay, is stock dilution when a company issues new shares. I speak about growth stocks a lot on this channel, and I speak about EV stocks a lot on this channel. And a lot of the time, growth stocks, okay, in their early stages of their life cycle, are going to issue new shares in order to raise capital at one stage or another. And in a lot of previous videos, I have said that honestly, share dilution does not worry me as a long-term growth stock investor. And I always get a few comments from people saying that, you know, they think that's crazy. It's obviously a bad thing if new shares are being issued, and I really just have to disagree. Obviously, if you saw a company like Facebook or Amazon or Apple issuing new shares, that might be a little bit odd, but there is a time and a place for issuing new shares. There is a time and a place for share dilution, and it does not by any means necessarily have to negatively impact current investors. And in this video today, I want to explain why that is. So if you're a NIO investor, you'll be aware of what's going on right now. And there is one article I want to go through in particular today. Why NIO's $1.5 billion stock offering is bullish. So guys, right before we get into it, can I please ask you to hit that juicy like button, as it really helps me and the channel out so much. I would be so appreciative. If you're new around here, hit that juicy red subscribe button, people. It is completely free to do. Join the family. And please drop me a comment down below. Let me know what you think about NIO, especially if you are involved in the stock. Let me know what you think about this issuing of new shares. Hopefully by the end of the video, I'll be able to show you why it's not necessarily a bad thing by any means whatsoever if you are a current investor. Anyway, people, with that being said, let's get into it. So guys, on Thursday, we got this press release from NIO, okay? NIO announces proposed offering of 75 million American depository shares. That will be ADS. You will see that a few times in today's video. So they're going to be offering these shares, each representing one Class A ordinary share of the company. The company intends to grant the underwriters in the ADS offering a 30-day option to purchase up to an additional 11,250,000 ADS. Morgan Stanley & Co., LLC, China International Capital Corporation Hong Kong Securities Limited, and BOFA Securities Inc. are acting as the underwriters. So if we go to NIO's 5-day stock chart, we are on this absolutely fantastic run. You'll all be aware of this. Us NIO investors are having an absolutely fantastic time. Then, you know, this news comes out, and since then we're down about 7.5%. Now, all in all, guys, we had gone up pretty much 50% in value over the span of not even 2 weeks. So to see this kind of a pullback would have been normal anyway, never even mind if there was these new shares being issued. This would have been very expected. I think the price we're sitting at now is absolutely fine. And in a little bit, I will speak about where I think the price could potentially go to and when I personally would be willing to buy more. But first of all, let's just speak about these new stocks that are being issued and why it will not affect you as a long-term investor negatively. So here is that article I mentioned in the intro, okay? Why NIO's $1.5 billion stock offering is bullish. And I love to see this. I love to see people not just saying that it's bearish because there is new stocks, because that is not how it works. So the main thing we need to know about this is why they're doing it. What are they going to do with the new capital that gets raised? So what NIO plans to do with the new capital is a little bit complicated, but it involves some strategic moves related to its funding round earlier this year, okay? NIO was not in a good position at the start of this year, and they had to take some, you know, deals that weren't necessarily the best for them in the long term. It looks like good news for long-term shareholders. So in its press release, NIO said, the company plans to use the net proceeds from the ADS offering mainly to increase the share capital of the company's ownership in NIO China, to repurchase equity interests held by certain minority shareholders of NIO China, and for research and development in autonomous driving technologies, global market development, and general corporate purposes. I mean, guys, all of that is absolutely fantastic. And without having the funding to do this, we're not going to see much growth come from NIO stock. I mean, we need NIO to be in a strong position if we want our share price to go up. It really is that simple. So if you're relatively new to the world of NIO, right, NIO had to give up a lot in exchange for a lifeline in April. And I mean, guys, if we go back to April levels, this was a $2 or $3 stock. Let's remember that. They have handled things absolutely amazingly since then. So back in April, when NIO was low on cash, NIO struck a deal with economic development authorities in the Chinese province of Anhui, whatever it's called, and its capital city, Hefei, in exchange for a cash infusion of 7 billion won, just under $1 billion at the time. NIO agreed to relocate its operations to Hefei and to help nurture a smart vehicle ecosystem in the city. So simply put, they were in a really tough position and they needed a cash infusion. But there was a big catch. As part of the deal, NIO and the investors agreed to create a new corporate entity called NIO Holdings, or NIO China. The government investors put their cash into NIO China, and NIO agreed to transfer just about all of its assets in China to NIO China, along with some additional cash of its own. What that means right now is that NIO owns 75.9% of NIO China, and the investors own the rest. Obviously, that's not ideal. NIO wants to be as close to 100% ownership in NIO China as possible. And the higher percent they own, the quicker we will be able to grow. So something like this happening in the short term that could, lead to a minor pullback will be good in the long term. The way I like to look at this sometimes is, maybe you're going to give up 10 to 15% in order to make an extra 100% in a few years' time. It's kind of like investing people, you're giving up having your money now so that it's more money in the future. Certain times when new stocks are issued, that's the way I like to look at it, and that's why I've said in so many videos, I don't mind share dilution some of the time. It can just be like an investment. So obviously, that's not a great deal for NIO, but it was the best deal available under the circumstances. I mean, they were on the verge of bankruptcy, people. You have to take what's given to you. Now though, with its sales back on a growth trajectory, I mean, look at the last quarter's earnings, guys. Look at the sales we had. Absolutely fantastic. Look at the vehicle margins and the gross margins. Best position we've ever been in. NIO wants to boost its ownership stake in NIO China, and the agreements with its investors give it a couple of ways to do that. And that is what this secondary offering is all about. So NIO plans to buy back some of what it gave up. Up to about $600 million of what is raised will go to exercise a provision in the investment agreements that will give it an additional 1.9% stake in NIO China. That cash will go into NIO China and can be used for NIO's research and development, expanding its sales and service network and other purpose related to the business in China. So guys, think about this really logically. This is a win-win for NIO. They are pumping money into, R&D and all of these other catalysts and getting more stake back in their own company. And another roughly $357 million will be used to buy out some of the shareholders in NIO China, which will give NIO up to an additional 8.6% of NIO China. So NIO is looking to gain ownership of an extra 10.5% stake in NIO China, which is very considerable. So that equates for maybe 2/3 of the money that will be raised, okay? The remaining cash will go to research and development related to self-driving technology, so autonomy, global market development, and general corporate purposes, all standard stuff. So right off the bat, guys, that's all fantastic. I mean, I don't see how you can see this negatively. Go back to the analogy I used earlier. It's like investing. You give up something now to get back more later on. Long story short, NIO had to give up nearly a quarter of its business in exchange for cash it needed to stay afloat. Now it plans to buy back some of that stock. And it's looking to buy back what seems to be about 40% of the stock that they don't own right now, which is a fantastic thing, no doubt about it. I don't see how you can argue there. And the Motley Fool says it very nicely at the end. Is this bullish for NIO? It certainly seemed bullish to me. If all goes as NIO expects, it will soon own 86.4% of NIO China rather than the 75.9%. If nothing else, that should improve NIO's cash flow, as it will be entitled to a larger share of cash from NIO China, and that is the main point I am trying to make. While the dilution from the offering might push NIO's share price down in the near term, I think long-term minded NIO investors ought to be pretty happy with what's happening here. And that is really what I am trying to get across right now. I'm very happy, okay, for two reasons. One, I have a small stake in NIO and I want to get more. So in the short term, yes, we may take a bit more of a dip. I'll speak about exactly what I think could happen realistically. In the long term, we're going to grow faster and we get a chance to buy at cheaper prices than we would have previously. I mean, it literally is a win-win. If you're a long-term investor, you should not care what the stock price does in 2 weeks. And me personally, I very realistically could see this stock price come down somewhere in the $15 to $16 range. Honestly, would not even surprise me if we came down even into the 14s. Now guys, as I said, I have a small position, okay? I have 60 shares in the company. I have a cost basis of $12.94 right now. My plan right now is that if we reach $15 a share or somewhere around that, I will buy another 30 to 40 shares. If we are to fall into the 14s, okay, I will most definitely be picking up at least 40 shares, potentially even 50 plus. Which, if you watch this channel, you know that I don't want very much exposure to the Chinese market in general for fairly obvious reasons, US-China tensions, etc. Also guys, for my Trading 212 ISA investors, you know that your NIO shares would have been sold off. That is also going to have equated for a little bit of this pullback because people didn't have a choice. Their shares just got sold and added their account. I would expect a lot of people to plan to buy back in around these price points, and especially if we do see a 10 to 20% dip, which is, it may not be too realistic. It may happen. We'll have to wait and see. I think a lot of people will be willing to buy back in quite heavily. So guys, there we have it. Share dilution is not by any means necessarily a bad thing. Would you rather buy this company at $14 to $16 a share, or where we were just a few days ago at $20 a share? I know what price I would rather if I'm going to be a long-term investor, especially as somebody who has a $12.94 cost basis. You know, it would feel pretty bad to buy at $20, but buying at $15 would feel absolutely fine. Now, do I plan on selling all of my stock with the intentions of getting in at a cheaper price? No, I most certainly don't. I don't like time in the market, and as I said, a 10 to 20% dip is definitely possible, but at the same time, people could realize this actually isn't a bad thing. They could see that we already had a near 10% pullback and just start buying at these prices. And if that happens, I'm fine. You know, as I said, I'm not too worried if I don't get a bigger position in NIO, but if we get that pullback, I think it'll be offering a very, very good opportunity. I mean, let's not forget that Q2 was a really, really good quarter. And a lot of the time in general with EV stocks, the second half of the year is the best half of the year. And with NIO now investing more in research and development, global sales, etc., I think we're going to have a very good 2 quarters. With more people back to work, with more people maybe willing to buy more cars, with NIO getting more and more popular in China every single month that passes, I think we are in for a good run, people. Remember, we got up to that quarterly vehicle margin of 9.7%, this close to double digits. Our quarterly gross margin at 8.4%. Sold over 10,000 vehicles. I mean, everything just screams buy to me right now. And that is for somebody who has a bias against buying Chinese stocks. I do think these guys are going to be a leader in China, okay? I much prefer them to XPeng. I think they're better than Li Auto. Tesla, obviously, massive competitor. I'll always have way more money in Tesla than I do in NIO. But guys, when you really think about it and you don't just see share dilution happening, it seems fine. I also want to show you this. The percentage held by institutions is currently at 42.29%. I most definitely think that this percentage is going to be going up over the next few weeks, over the next month or so. So just keep your eyes on that. But guys, there we have it. Just keep in mind where they literally were not even 6 months ago. How they have turned the business around. How they have turn their profit margins around. It's all bullish in my eyes. So that is where I think NIO could realistically go to in the short term price wise. It could just go up. It could, in my opinion, fall to the $15 to $16 range. That is where I would be willing to buy more. And there we have it, people. That is NIO, and that is why share dilution is not necessarily a bad thing. Also guys, let this video be a lesson in why doing due diligence and doing your own research and forming your own thoughts and opinions is so important. You cannot just take absolutely everything that you read online at face value, or else you're going to get scared. If you always form your own thoughts and opinions, you're going to be confident in your own analysis. You are going to be willing when you see, you know, pieces of news like this that initially look bad, but when you look into them, actually aren't bad whatsoever. And as always guys, if you have watched until the end of the video, you, my friend, are a true legend, and I really, really do appreciate you. You are helping me out so much, so from the bottom of my heart, thank you. If you did enjoy the video and you got some value out of it and you haven't yet, please hit that like button, drop me a comment and subscribe if you're new around here, because all of that helps me out so much. And with that being said guys, I hope you all have an absolutely fantastic day. I'll have another video coming out later on. Have a good one guys. Peace.